Welcome to the exciting world of real estate investing. Today, we dive into the concept of leverage. Leverage, a term you may have heard before, but what does it really mean in the context of real estate? Well, it's all about using borrowed capital, someone else's money, to fund your investment with the expectation that you'll make more in profit than the interest you'll need to pay back. Think of it as a tool, a financial instrument that gives you the capability to amplify your investment returns. It's like using a lever to lift a heavy object. With a little effort, you can move something much larger than you could on your own. In the world of real estate, the property you invest in becomes the fulcrum, your initial investment, the effort, and the borrowed capital, the lever. Now that we've defined leverage, let's delve deeper into its workings. Understanding the mechanics of leverage is vital to making it work for you. Leverage, in the simplest terms, is the use of borrowed money to fund an investment. It's like a powerful tool that, when used correctly, can help you control a larger asset with a smaller amount of your own money. Imagine it as a lever that you can use to lift a heavy object. With just a little effort on your end, you can move something much more significant than you could have on your own. Now let's apply this concept to real estate. Picture this. You're looking to purchase a property worth $100,000. You could wait until you've saved up the full amount, or you could use leverage. With leverage, you only need to put down a fraction of the property's cost, say $20,000. The rest, you borrow. With just 20% of the total cost, you've now taken control of a property worth 5 times that amount. But why would you want to do this? Well, it's all about the potential for higher returns. Let's say the property appreciates over time to $120,000. If you had waited to buy it outright, your return would be 20%, but because you used leverage, your return on investment is a whopping 100%. You've doubled your initial investment, but it's not all sunshine and rainbows. Remember that lever we talked about earlier? Just as it can lift, it can also drop. If the property's value decreases, your losses are also magnified. This is the double-edged sword of leverage. It can amplify your profits, but it can also intensify your losses. It's an incredibly powerful tool, but it must be used wisely and with a clear understanding of the potential risks involved. Remember, leverage magnifies the potential gains and the potential losses. Leverage plays a significant role in real estate investing. This gem of wisdom is something all budding investors should etch into their minds. Now, let's dive into the crux of the matter. When we talk about leverage in real estate investing, we're essentially talking about using borrowed capital to increase our potential return on investment. Sounds simple enough, right? But the magic really begins when we break it down and view it in action. Imagine you have $100,000 to invest. You could choose to buy a property outright, say a small condominium. Now let's say the value of that condo appreciates by 10% over a year. Your return on investment is 10% of your initial $100,000. Not too shabby, right? But let's look at it from a leverage perspective. Instead of buying one property with your $100,000, you decide to put down 20% on 5 properties. Each property again appreciates by 10% over the course of a year. Now, your return on investment isn't just 10% of your $100,000, but 10% of the total value of all 5 properties. That's the power of leverage. But as with all good things, there's a flip side. Leverage can amplify your losses just as it can boost your gains. If the market takes a downturn, you could find yourself owing more on your properties than they're worth. But don't let that scare you. As long as you do your homework and make smart, informed decisions, leverage can be your best friend in the world of real estate investing. Now, it's important to remember that leverage isn't just about increasing potential returns. It also provides the ability to scale. With leverage, you can buy more properties, diversify your portfolio, and spread your risk. Leverage in real estate can be a powerful tool, but it must be used wisely. So, as you venture into the exciting world of real estate investing, remember to use leverage to your advantage, but always with caution and prudence. Leverage comes with several benefits that can boost your real estate investing journey. Let's delve into these advantages. Firstly, leverage can significantly enhance your potential returns. When you invest in a property using borrowed capital, you essentially amplify your return on investment. Imagine you purchase a property for $100,000 with just $20,000 of your own money and $80,000 from a loan. If the property's value increases to $120,000, you've essentially made a profit of $20,000 on your $20,000 investment. That's 100% return, all thanks to the power of leverage. Secondly, leverage empowers you with the ability to buy larger properties than you could afford outright. This opens up a whole new world of opportunities. For instance, instead of buying a small apartment, you could leverage your capital to buy a multi-unit building. This would exponentially increase your rental income and diversify your investment, spreading the risk across multiple units. Thirdly, leverage increases your purchasing power. Instead of tying up all your cash in one property, you can use leverage to spread your capital across several investments. This not only diversifies your portfolio, but also enhances your potential for wealth creation. Remember, the more properties you own, the more income streams you have. Lastly, the use of leverage can also provide tax benefits. The interest paid on borrowed money for investment properties is usually tax deductible, which can help to reduce your overall tax liability. In a nutshell, the strategic use of leverage in real estate investing can lead to higher returns, diversification, increased purchasing power, and potential tax benefits. It can be an incredibly powerful tool in your real estate investing toolkit, opening up opportunities that would otherwise be out of reach. However, while the benefits of leverage are enticing, it's crucial to understand the risks. Always remember, with great power comes great responsibility. Stay tuned as we delve into the risks and precautions of leveraging in the next segment. As with any financial tool, leverage comes with risks. Now, you might be wondering, what are these risks? Well, the most prominent one is the potential for greater losses. Remember, leverage isn't just an amplifier for your gains, it also magnifies your losses. When you use borrowed money to invest, you're essentially betting on the future. If your investment doesn't pan out as expected, you're still obligated to repay what you borrowed, and this can lead to significant financial strain. Imagine you've leveraged heavily on a property, and the market takes a downturn. You're now left with a property that's worth less than what you owe. This is known as being underwater, and it can lead to financial ruin if not managed correctly. And it's not just market fluctuations you need to worry about. There are other risks, such as interest rate rises, which can increase your borrowing costs and squeeze your profit margins. So how do you mitigate these risks? The key is to have a solid risk management plan in place. This plan should outline your investment goals, your risk tolerance, and your strategies for managing potential losses. Firstly, always do your due diligence before investing. Research the market, the property, and the potential returns thoroughly. Don't just jump into an investment because it seems like a good deal. Secondly, maintain a healthy cash reserve. This can act as a buffer in case of unexpected costs or market downturns. It can also give you the flexibility to seize new investment opportunities as they arise. Thirdly, consider diversifying your investments. Don't put all your eggs in one basket. Spreading your investments across different types of properties and locations can help to mitigate your risk. Lastly, keep a close eye on your debt levels. Borrowing can be a useful tool, but it's important to ensure that your debt is manageable and within your means to repay. Leverage, when used correctly, can be a powerful ally in your real estate investing journey. So understand the risks, plan for them, and use leverage wisely to maximize your potential returns. Let's recap what we've learned about leverage in real estate. At its core, leverage is the use of borrowed money to increase the potential return on an investment. We dove into the mechanics of how it works, showing that it can enable you to purchase properties that might be out of reach if you were relying solely on your own capital. We also explored the many benefits of leverage, such as the potential for higher returns and the ability to scale your real estate portfolio. But it's important to remember that with these upsides come risks. Leverage can magnify losses just as it can boost profits, so it's crucial to approach it with caution and a well-thought-out strategy. We hope this video has provided a clear understanding of leverage in real estate. Remember, knowledge is power, and the more you understand about your investments, the better decisions you can make. Until next time, happy investing.